Hello, everybody. Welcome to Trading the Close. My name is Drew Dosick, and today, folks, we saw some more red in the market. Selling pressure came along right out the gate, and then a little posturing throughout the day, and then selling took place even more right at the close. People taking profits going into 2026. Happy New Year's to everybody out there. We will have the markets closed tomorrow, but the markets will be back open on Friday. All right, guys, let's check out the market summary board to see where everything panned out today. You can see here we got the Dow Jones down 0.64%, Nasdaq down 0.76%, S&P 500 down 0.71%, U.S. oil down 0.81%, gold down 0.65%, and Bitcoin seeing still a little bit of pressure down 0.88%. All right, so let's jump into the S&P 500 heat map. Guys, man, what a sea of red. Now, if we had heavy volume, I'd be a little bit more concerned. We do still have that lighter holiday volume. Volume did tick up, though, at the very end of the day. But look at all of this red. Now, they're not down that much. Here, NVIDIA, a little over 0.5%. Apple, about 0.5%. AVGO down 1.07%. Qualcomm down 1.5%. Micron down 2.47% after getting close to a psychological number. Microsoft down 0.79%, Meta down 0.88%. So you can see the big stocks were down, finance is down, health sector's down, retail trade, consumer durables, you name it, all down going in towards the end of the year. So let's check out the S&P 500. And guys, we're going to do a yearly recap to really start off each one of these charts. We've been following these charts all year long. And so this is a good way to kind of step back and really understand and really put things together, the pieces of the puzzle, to see where price action has gone. So you've got the S&P 500 up about 17% for the year. Great break these last 2 years, as you can see here in 2021, 22, and 23, really just moving sideways on the annual candle. And then the last 2 annual years, we just pushed right up nicely. So we zoom into the daily time frame. You can see here this big red candle generated today, pushing the price right back down here on the charts. Now we're coming really close into some minor support at $680. But as that gives way, the next support's going to be down here at $671.26. Notice too, beautiful sleeper hold right here, sleeper hold right here, sleeper hold right here. Guys, over and over and over on the charts, these sleeper holds repeat themselves. You guys can help yourselves out too for the new year. Get this course, Mastering the Overnight Trade, the sleeper hold. Start understanding when markets are going to start turning in position, whether turning to the downside and or to the upside too. Very interesting stuff to learn, especially when you can understand time counts. All right, so into the Qs we go. You can see here for the year, very nice push, even better than the spiders in the S&P 500, up 20% on the year. We zoom in closer on the daily chart, and look what we have here, folks. We've got the Qs here now bouncing on the bottom end of this parallel channel, getting close to the bottom of this parallel channel too. We're talking around $611. So be mindful for that come Friday, as that area could generate a bounce. That should be a decent level of support. But if that breaks, that also gives us a lot of insight too as to what to expect in the first couple weeks of the new year. Next up, the SMH, as you see here in the annual candle. Look at this, guys. Huge push, up over 49% on the year. Massive move on the SMH. It's to be understood, right? We've had a whole bunch of AI data center talk and build out new chips that are being developed. And the craze obviously was there, clearly displayed there on the annual chart. So let's get back into the daily chart that we see here. We can see a nice push down today, all coming from this resistance area at $367.56. Next support's going to be the 50% area of this parallel, right around $355. So be watching for that in the coming days to see if that holds. If that holds, that could produce a nice bounce to retest this level of resistance that's displayed on the screen at $367. Next up, the IWM, not as strong as the other indices, up about 11% on the year. But guys, look what's happening on this chart. Something I need to notify you guys about, especially for the near to midterm. We've got a left shoulder, a head, and a right shoulder that was broken today, triggering this head and shoulders pattern with a measured move down here at $236.10. So that tells us the IWM could be under pressure going into 2026. Now, of course, you could get bounces, and you notice we're right into this level of consolidation, or pretty close to it, right around $245. So expect potential support in this area to retest this neckline. And then, guys, watch out. We could be headed right back down here to $236.10 on the IWM. Bitcoin here, as you see on the annual candle, is down on the year, about 6% down. And if we zoom into the daily time frame, we know that Bitcoin's been struggling right here at this 50% area of this much larger parallel that you see here on the chart. And this area, though, in the very near term, has all been somewhat bullish consolidation. Pretty nice development here in the near term on Bitcoin. We just need to see it break out of this bullish consolidation and retest this 50% area, the parallel at $93,237. If it does that, that would be very great for the bulls. So be watching for that coming into the new year. Next up, gold. Guys, what a performer here on this chart, up over 64% on the year. Great push on gold, but gold in the last few days has been under some stress and duress. Guys, you can see here, big red candle, teetered right here on the 50% area, the parallel for one day. Now today, pushing price under that area, looking like we're going to be closing the day or under this area too. So the next level of support is going to be this bottom end of the parallel channel at $4,226. Not that far away, just about $80 on the chart of gold. Next up, silver. Much better of a performer than gold, even better, up 146% this year. That's even with some of this pullback that has occurred most recently. And yesterday we were talking about how the bounce in silver somewhat failed. Well, it did because it didn't get back up into the top 50% of this red candle. That would have been much more bullish near term for silver, for it to recapture some of or most of this big loss that occurred. As you see here, the continued selling pressure persisted through the day, but we'll just watch this as it progresses along. If we get price back up into the top 50%, probabilities can start shifting. But as long as we're hanging out in this lower 50% of this consolidation, that should imply a little downside on silver down to the $62 range for the next support. Next up, oil. Oil, as you can see here, has been down on the year, down about 13%. But really, we've been tracking this for the past several weeks, and not too much to report on oil. As you see here, we've got a different declining trend line right here that does and currently is capping price on oil. So that should be a resistance level to watch here come Friday, right around $59, and watch that progress through the beginning of the new year. Beating that will release some pressure and increase probabilities of another retest of this higher trend line at $61. Next up, nat gas, not on the annual chart because not too much to report. It's just up a couple of percentage points. But today's sell is still right here in this consolidation range. As you see here, big down move, sideways consolidation. That's bearish, folks, telling me this next support level at $3.30 is going to get tagged sooner rather than later. Next up, some of the big heavyweights in the markets, folks. And I think, guys, too, as I bring all these yearly charts, I know I don't normally do this, but I'm doing this to help you really picture what's going on. We've had so much growth in the mega caps this year. It's really been phenomenal. And really, you can see it right here on the annual chart. When you go back to previous years of NVIDIA and you look at these last two, what monumental years they've had and great push-ups on these charts. But some have not been all that fortunate. We'll get into that, especially with the chart of Netflix here in a minute. But anyway, so NVIDIA, as you see here, up over 40% this year. Great push. But look what's happened here on this chart. Most recently, great decline, right? Bounce back up and bullish consolidation. So that somewhat implies this semiconductor company is likely going to be pushing up a little bit more in the near term. This bullish consolidation, if it does play out, it should be able to push up and test the 50% area of this parallel right around $205. Next up, Apple. Apple was up about 8% for the year, not nearly as much as NVIDIA as we saw before. Notice that nice consolidation that occurred over the 3 years and then the continuation move up. But on the daily chart, it's telling us a little bit of a different tune, guys. Look at this. We've got a left shoulder, a head, and now we have a right shoulder developing. This inclining trend line right here is the neckline of that head and shoulders pattern. If this does play out, price will come down here to the 50% area of the parallel, basically right at $250. So be watching very closely right around $268 over the next several trading days if Apple starts coming down to break this level, as that could be significant downside in the near term for this large company. Next up, we've got Google. Look at the impressive push here on Google this year, up 65% there on the charts. Back into the daily time frame we go, and what do we have? Pretty similar to what was going on in NVIDIA. Nice move up, somewhat of a near-term V-shaped recovery and bullish consolidation. That does say also near-term in January, we could be pushing up a little bit higher. Next resistance, $321.28 from this longer-term trend line strung out from the tops of all of these pivots. Price most recently got above it and then has trickled down, looking like we're trying to retest that trend line going into 2026. Now, guys, look at this other mega cap. Now, what's going on here, guys? This isn't a good looking chart, especially this year's candle. Guys, that's a yearly topping tail. That's pretty rare to find, especially on a mega cap company and such mammoth yearly topping tail that's going on here on Netflix. All right, so let's zoom in closer and see what's going on with this chart. On the daily pattern, we can see here we've had a big move down after breaching the top end of this parallel channel, and we've since now put in bearish consolidation underneath the 50% area of this parallel. That implies, guys, we're going lower. We're going to 88 or 82 bucks. So be watching out for price to continue lower going into 2026. Now, all of this can be reversed. Now, keep in mind, whenever there's a failed move of a bear flag, you could have a big pop up to the upside and retest and get above the $100 mark here for Netflix. But right now, this chart doesn't look that good. The yearly time frame shows that we should be going down in at least the next couple years over Netflix. But keep in mind, topping tails like to retrace about 50% of that topping tail. So an upward move is a possibility, and then would be a great place to start entering a short if you're a longer term investor on something like Netflix. Lastly, guys, just going over Nike. This was one of the biggest movers of the day today in the stock market, pushing up nicely, getting a boost from some CEO and executive investments, reinvesting in the company. They're definitely thinking the bottom's in. But you see here, this company is down 4% on the year, and it's been down the last several years too, right? So let's zoom into the daily time frame to get a better idea what's happening in the near term. We see here this nice push up today of 4.12%. Next level of resistance will come right in this range. We've got a gap fill just above $65.60. Plus, we've got a declining trend line right here for Nike to beat at $66.65. Should it beat that area, then we can be talking about breakout scenarios with Nike. So be watching this. They've been under some tariff stress and also lower foot traffic in some of their stores. So it'll be interesting to see how they turn that corner in 2026, get some more investors involved, and push this stock through this declining trend line. All right, guys, that wraps up Trading the Close. Thank you so much for watching today. And not only today, this entire year. It's been great having you guys along with this journey, walking through these charts day by day, understanding and trying to predict which way these stocks and commodities are going to be going. It's been an awesome year. Can't wait to see you again in 2026. Until then, have a safe and happy new year. Don't forget to like and subscribe. Send this out to your friends and family so they too can have a prosperous 2026. Till then, guys, I'll see you on the charts. Take care.